Hello everyone, welcome with a new episode of our community call where I will host the call with special guest Mark Yusko together with Anthony Fernandez from Economy. In the beginning of the year we had Raoul Pal in our middle, and today we can close the year with Mark Yusko for some nice insights. I'm very honored to have him here, and I want to thank you, Mark, to make some time to speak to our community. Welcome. How are you today?
No, thanks. Thank you for having me, Tim. I'm excited to be here. Excited for the conversation. And it's funny. I grew up with a name ending in Y, so I always knew to go last in line, back right of the classroom. And here we are. Raoul gets to be at the beginning, although he's a P, so he's more in the middle. And I do the close up here in December, but all good, all good. Great to be here.
Yeah, nice. I'm very curious about your insights. Anthony from Economy will lead this call and ask you a lot of questions what we speak about together. I think you're also excited to give your answers to us.
Yep,
good.
Looking forward to it.
Okay, Anthony, do your thing. Let's start.
Great. No, yeah, thanks for also inviting me onto the show, Tim, to meet with Mark today as well. So I've been watching your content for a while, Mark, so a lot of insights from yourself would be grateful. I guess a couple of topics we're going to hopefully go through today. Some of them will be around Bitcoin halving event, Bitcoin's price cycle. We'll touch on the Bitcoin spot ETF applications.
Yep.
I'm definitely interested in hearing your thoughts on the financial conditions going into 2024 and your base case scenario for next year. Hopefully we'll get some price predictions from yourself, take a look at Solana, and maybe some top picks from the cryptocurrency market going into the next bull cycle. So let's jump straight in with Bitcoin's price cycle and its 4-year cycle. Anyone that's been in the cryptocurrency market, I guess, is aware of this 4-year cycle that's based around the halving event, which is going to take place next year. So I guess, I'd love to hear your thoughts on the halving cycles going forward, whether you think the halving cycle is going to have more or less of an impact as more Bitcoin is mined over the years to come, and whether the liquidity coming in from institutional investors is going to impact that price cycle further as well.
So a couple of things. I mean, one, I think it actually is one of the great kind of technical innovations of Bitcoin was this idea of hard coding in a mechanism that would lead to price increase over time. And why does that matter? Well, movement inspires action and activity and followership. And what I mean by that is it goes back to our innate kind of hunter-gatherer kind of thing. The hunters would be out and we need to be able to see things that are moving, right? And now I take it to the extreme. If my wife tells me to get the ketchup, I go to the refrigerator and I say, honey, there's no ketchup. She walks up, she grabs the bottle. If it ain't moving, I can't see it because I'm like, total hunter. But what I mean by this is every 4 years, the block rewards, the amount of Bitcoin that are handed out to the miners that are securing the network, gets cut in half. Now, why does that matter? Well, if you think about it, a miner has fixed costs. Their electricity costs are roughly fixed, their miner costs are fixed, and they're depreciating. And so if the block rewards, the amount of compensation that's given to the miners falls in half, some number of those miners would go out of business and the network would be less secure unless the price adjusts and goes up. And what we have seen in every halving to this point is the price roughly doubles in terms of the fair value. And the fair value you can determine by Metcalfe's law, right? The number of users of the network and the activity levels. And so I have this buddy in the business, Tim Peterson, and he's done this great Metcalfe's law model. And it basically plots out on this parabolic curve what the price of Bitcoin will look like. And it's influenced by this halving event. And so if you look back in time, each halving has roughly added a 0, which means you get a 10x increase in overall value. And that, again, base 10, logarithmic scale, Metcalfe's law, all foots. And so, we went from 10 to 100, 100 to 1,000, 1,000 to 10,000 for last time. And this one would be 10,000 to 100,000. We said, well, Mark, it's only 38,000. Well, okay, let's think about this. So 38,000 is the price. Price is not what I'm talking about. Price is a liar, right? Price is what two people agree to exchange a small amount of a good or service. That's not the value. The value, the fair value today is in the low 50s, somewhere 51, 52. Let's round it to 50 even. Where is that value coming from? It's coming from the network value based on all of the fundamental data on Bitcoin. So we're below fair value. So investors like myself are in accumulation mode. And if you look at the chart, it's a thing of beauty over the last year. Higher highs, higher lows. Doesn't mean there's not volatility, but it's an accumulation pattern, okay? And that is an absolute thing of beauty. And so in accumulation, you get this movement toward fair value. Because, when we were down at 15,000 a year ago, fair value was in the 30s. We were at, half of fair value. Today, fair value's moved up to 50. We're at 38. So yes, the price is up more than 100%, but we're still below fair value. So we're going to keep accumulating to fair value. But when the halving occurs next April, the fair value will double. Now, it won't double overnight, but technically it does. But the realization of that fair value will take some time. And in every other event, some miners will shut down. And so that means we don't have to go all the way to doubling right away. But as the price then starts to rise, those miners can come back on. Hash power continues to increase. The miner rewards as a total dollar value, number of rewards times the price, stays consistent, and we get the right growth. So I will say that fair value sometime middle of next year ends up around 100K. In June of next year, we'll enter crypto fall. So in the 4-year cycle, you have spring, summer, winter, and fall. And crypto winter, last winter from kind of June of 21 to June of 22, that was pretty ugly, right? We were down 77%. Then spring hit and we started to recover from June into November. Hurricane Sam happens. We collapse all the way down to that 15,000 level. And people are like, oh, Bitcoin's dead. And see, I told you. And thankfully, people realized Sam doesn't matter, FTX doesn't matter. Bitcoin is bigger than any one person or one organization. And I apologize, this is a long answer to your question, but so we entered crypto crypto spring. Then June of last year to June of this year, we had crypto summer. Crypto summer is not straight up. Crypto summer is kind of meandering back toward fair value. So by June of next year, we'll be at fair value. So call it, we get close to the 50K, but then we do the halving, and now we got to get from 50 to 100. And it's that movement that takes from investors being the people who are buying below fair value. Now we get closer to fair value, the traders come in. And traders don't care what the price is. They don't care what the value is. They just want movement. And so the traders buy and sell either side. As we get towards that fair value and we start to accelerate, now the speculators come in. Because now the miners are selling and a speculator is just the opposite side of a hedger. A hedger is someone who produces an asset like a gold miner or an oil producer. They have to sell their product forward in the futures market, and a speculator takes the other side. But that speculation starts the price moving even more, and more speculators come in. And then we get into crypto fall. So June of next year, we go into crypto fall. Well, what is that? That's the parabolic crazy part. That's where the gamblers come in. And we get leverage. And in every cycle, we've seen this speculative blow off. So if you go back to the last cycle in 17, I'm sorry, in last cycle would be 20 in 2020, what happened is we went up, okay, closing in on fair value at 30,000. Then we went all the way to 69, which was crazy. And that was because GBTC and Binance and all this, speculation. And then we get too far above fair value, and then we have to have the crash. And once the liquidations start happening, once the margin calls come in, that's when you get the big correction. You always go down below fair value, and the process starts all over again. So apologies for the long answer.
No, that was great. So is fair value the main metric you're looking for as in terms of your investment team, or do you have any other kind of specific indicators that your team utilizes, like on-chain data in the 4-year cycle, any adoption rates, or is it mainly fair value that your team is kind of looking?
Well, so we're different than a lot of other investors, not good or bad, but we're a venture capital fund. Morgan Creek Digital, we run venture capital funds. We're raising our 4th fund. And we invest 70 to 80% in equity of businesses that provide the infrastructure to the digital asset ecosystem across A, B, C, D, AI, blockchain, chips, and data. So we invest in those 4 areas. We also invest 20 to 30% in the liquid protocols of Web3. So we believe that Web 1 was the flat part of the curve, right? $2 trillion of wealth created by Cisco and Microsoft and Intel. And that was the smooth part of the curve. Remember, the wealth is the area above the curve. So you have the axis, the x-axis, and the y-axis, and you have this exponential growth curve. And, Raoul's talked about this. You got this exponential curve. So the flat part was Web 1. The area under the curve, 2 trillion. Then you get to the knee of the curve. That's Web 2, 5 trillion. But now we're going to the parabolic part of the growth curve. I don't know, 15, 20 trillion. It's going to be a big number. And so you think about that growth process. Web 1 was all about read, get access to information. Web 2, read, write. Web 3, it's read, write, own. So in Web 1 and Web 2, that $7 trillion all went to the application layer. Like right now, we're using TCP/IP, but Tim Berners-Lee and Vint Cerf did not get rich. Vint created TCP/IP. Tim Berners-Lee came along and wrote the first web page, created HTTP, and now we have the internet. But they didn't get rich. Who got rich? Zuck.
Companies, yeah.
Right? Because he stole an app from the Winklevoss twins, gave it away for free, and then monetized our data. Genius. I'm not saying it's not genius, but he didn't invent the internet, right? The protocols didn't capture the value. In Web 3, so far, about 80+% of the value has been captured by the protocols. Bitcoin, Ethereum, Solana, etc. And only about 20% has been captured by the businesses because we don't have very many applications. There aren't that many applications of substance that have been built. And the reason is we haven't even started the game. This is the fun part. Technology evolves in a 14-year cycle. It's been going on since 1954 when the mainframe was created. And 14 years later, you had the microchip in 1968. And then in 82, you had the personal computer up in Seattle where I grew up. Then in 1996, the internet. In 2010, the mobile net, where we all carry around supercomputers in our hand. And now 2024, which is only 30 days away, so happy December, 30 days from now, we will enter the beginning of the blockchain era, or the truth net, as I call it. So we went from the internet to the mobile net to the truth net. What's the truth net? It's where blockchains replace the current operating system of iOS and Android, and we disrupt financial services, the trust industry, with truth. Blockchains establish truth. We don't need to decide, who's right, who's wrong. We don't need auditors. We don't need accountants. We have truth. We have permanent, immutable, trustless, permissionless operating system that will guide the development of Web3. And it's just starting in 2024. And we'll have this 4-year hyper bull market, lots of development, lots of companies. And then in 2028, we have a bust. Just like in 58, we had a bust with the mainframes. And then in 72, 73, we had a bust with microcomputers. And then in, 96 to 2000 and 2000, or I'm sorry, 82 to 86 with the personal computer. And then 87, we had a crash. Then 96 to 2000, then we had a crash. Then 2010 to 2014, and we had a crash. So 24 to 28, and then we'll have a crash. But the cool part, the crash is where the magic happens, because all the bad stuff gets weeded out and the good stuff starts. And that's where, if you remember back in 2001, all these internet businesses got crushed. Webvan, pets.com, all this stuff. And Mark Andreessen famously said, all those ideas were right. They were just early. Now comes the fun part. And all the big wealth came from the companies that reformulated post the crash in 2000. And the same thing's going to happen. And the same thing happened around Facebook and Alibaba. Remember, Alibaba was almost out of business. Facebook, when it went public, it went down 50%, right? Google went down because people didn't understand the power of social media and localization and e-commerce. So anyway.
Just on that, Mark, so without going into, price projections just yet, so is 2028 your kind of long-term goal in terms of when you're looking to reduce exposure to those types of assets? Not including,
okay. Okay, great question. So, in a perfect world, you would time it perfectly and you'd step to the sidelines. And the problem for us as venture capitalists is most of the things we invest in are illiquid. Now, what's likely to happen in 27, 28 is we'll get a whole bunch of IPOs. All the companies that get built on top of the protocol stack will go public, and hopefully we'll be able to sell some into that. But we won't sell everything, because all that bust is again, it's a setback in the beginning of the S curve. So all innovation happens in an S curve. 10 years for the first 10%, another 10 years for the 80% in the middle, that upside of the S curve, and then 10 years for maturity. And that's the way it happens. But Tim Draper talks about this, that what you really have is an IS. So you get a hype cycle and a bust in that first 4 years as you get closer to the knee of the curve. And it's a false breakout. And then you get this bust, but it's from that bust where you begin the upslope of the S curve itself. So I think that 28 period will be one of consolidation, and you'll want to have dry powder, and you'll want to have tried to get liquid in 27, 28. But the really important businesses of the next 50 years will be built around that period.
Interesting. Now, speaking with Tim prior to the call, Mark, he had a common question amongst his audience, and they were quite intrigued to listen to your thoughts on the following. We get a lot of comparisons between Bitcoin and Ethereum, which one is going to have a lot more value moving forward. So I guess, based on the tokenomics of Bitcoin, which has a predefined inflation rate, obviously the halving events, whereas Ethereum's value comes from projects being built on top of that particular blockchain and its adoption rate. Where do you see more value yourself? Are you, in the Bitcoin camp, the Ethereum camp? Which one do you think would have more value moving forward for potential investors?
Yes. I am a technology maximalist. It's funny. I like to surf spaces. And so I'll go to a Bitcoin space, and they'll be like, get out of here, you shitcoiner. You own all this other stuff. Like, dude, I own more Bitcoin than you. And that's not a brag. It's not a brag. It's just, I've been lucky. We were early, and look, I'm not like the Winklevoss twins, but I have a decent amount of Bitcoin. And but you're not a maxi like us. I'm like, no, I'm not. And then I'll go to an Ethereum space, and they'll be like, get out of here, you maximalist. I'm like, I own more Ethereum than you. I'll go to Solana space, and they'll be like, get out of here, you. The point is, I believe in all of them. And I did have a struggle with Solana, which it's funny. We were early investors in Solana, not because we're brilliant, but because Kyle was brilliant. And we invested in Multicoin, and Multicoin invested. And we actually, it's one of the best investments I've ever had in my career. But we sold a lot of it when they had the problems around the Breakpoint party in the Netherlands. No, it was the Breakpoint party in Lisbon.
Yes.
Where $1 million after parties, and we're like, well, we're out. That's a bad sign. And so we sold a lot, but we didn't sell it all. And I was skeptical that you could fix that Solana could fix the problems. And I said famously that transactions were vaporizing. Like, no, we never rolled back the chain. I'm like, I didn't say you rolled back the chain. I said that because of congestion, people were putting transactions in, they never got realized. And to me, that's vaporized. But the point is, this guy reached out to me and said, hey, I want to talk to you, and fixed me on Solana. So what I'm excited about there is, since I publicly changed my mind, it's up like 600%. So it's kind of cool. But so I'm taking full credit for the pump. Not kidding around. I'm kidding around. It's the developers and the builders that take full credit for the pump, not me. Although on the net, I mean, it's literally the day of the bottom in September where I physically, I was wrong. So I think to answer the question, Bitcoin is more developed. It's the most developed. It's the oldest, right? It's the king. And Ethereum is the crown prince. So it's kind of the second place. And I'll give you the way we look at it. So in 2018, when we started, I said we invest 70% in equity, 20 to 30% in tokens. And we bought basically 4 projects in 2018. We bought Bitcoin because we thought it was like a Series B. And when I say we bought, the reason I say we're different, we don't trade. We buy and we hold. And we have a 10-year life. And at the end of 10 years, we have to give the money back to investors. That's the way venture capital works. But I'm going to hold Bitcoin forever, literally. And that doesn't mean I'll hold all of it forever. I'll use some of it, but I'm going to hold it forever. Ethereum, I'll probably hold forever, at least parts of it, because I do believe, as you said, it's a building block. And we'll talk about why I think this in a second, but we bought Bitcoin because we thought it was a Series B. And a Series B means you think you can definitely make 10 times your money, maybe more. And when we were buying it, $4,000, we were pretty sure we could make 10 times our money. And sure enough, we've made 10 times our money. We bought Ethereum as a Series A, which means you think you can make 25 times your money. It doesn't mean you will, but it means you think you can. And interestingly, it's up about that. We bought some Solana, which was a seed investment. Now, a seed investment can go up 100x or go to 0. And a lot of them go to 0. And that's the nature of venture capital. It's a power law game. It's not about hits. It's about slugging percentage. It's how far you hit the ball when you actually hit it. In fact, there's a great story in the U.S. Babe Ruth, famous baseball player, he's sitting up in the post game, drinking a scotch, cigarette in his hand. And they said, babe, how you feeling tonight? Rough night. You struck out 4 times. He says, I'm feeling great. I'm like, babe, you struck out 4 times. He's like, yeah, I'm that much closer to the next home run. Because he was going to strike out X times and he was going to hit X home runs. And hey, if I had more strikeouts, it means I'm going to have more home runs next game. And that's the way you have to think about it with seed deals. Some of them are going to go to 0, but the ones that hit, I think we made 1,000 times our money on Solana, so it was good. And then we had a little bit in the graph, which was a pre-seed. It was not going to be good necessarily, but if a pre-seed thing works, you literally can make 1,000 times your money. Again, it doesn't happen very often, but but on occasion. So in fund 2, we made a mistake. And, I'll own it. But, I had 2 young partners at the time, Pomp and Jason, and they'd become maxis. And they're like, nope, we're only going to buy Bitcoin. I'm like, but guys, Ethereum is taking off and all this DeFi stuff. And we could have been day one in a whole bunch of really good DeFi projects. I mean, we had this young guy out in California who had introduced us to Aave and Compound and synthetics. And I mean, he's a mad genius. I love this guy, Matt Moravec. And they were like, no, Bitcoin only, Bitcoin only. And I'm like, And I'm not a techie, right? I'm a financial services guy that now is a venture capitalist, but I'm not a tech guy. So I couldn't argue with them over the technology. And we made a mistake. We only bought Bitcoin in that fund, and we should have bought some other stuff. In fund 3, we're right in the middle of the bear market, so we didn't buy a lot of liquid protocols at all. Now with fund 4, we're definitely buying a wider swath. But the reason I hesitate a little bit with the answer is I don't know yet which wins. And what I mean by that is which mental model wins. If I think about the internet, it's easy in hindsight. At the time, it was not easy. There were 80 internet protocols. All right. And oh, shoot. Sorry, guys. Hold on.
No problem.
I hate my iPhone. Okay, sorry. Somehow I didn't silence my notifications. Where the hell was I? Oh, L1. So in the internet, there were 80 protocols. Today, there are 5. What happened to those 75? They went to 0. But it didn't matter because you couldn't invest in them, right? You couldn't own any of them. You can't own TCP/IP. But at the base layer of the internet is TCP/IP. It's actually IP, and then TCP/IP sits on top of it. And then there's FTP to move files. There's SMTP for email, HTTP for websites, and www that ties it all together. So it's a perfect stack. In Web3, I can make a case that Bitcoin is the base layer and that every asset will eventually settle on Bitcoin. I can make that case, right? That Filecoin, IPFS is kind of like FTP. Ethereum is like the www dot, right? It's the building block toolkit. In the middle, is it Solana? Is it Cosmos? Is it Polkadot? Is it Avalanche? I don't know. And it's not a perfect map of SMTP and HTTP. So that's one mental model. The other, the maxis will tell you, nope, it's Lord of the Rings, one chain to rule all chains. It's Bitcoin, it's Lightning, L3, L4, and that's all there is, and that's all there's going to be. Maybe show me how Lightning can scale. Right now, mathematically, it can't do what you say it can do, so maybe you'll fix it. And there are no L3s and L4s yet, so we'll see. Or there's the lots of tall trees, lots of L1s, and there's, Bitcoin and Ethereum and Solana and all these others, and then we're going to have bridges that go between. I struggle with that one because the bridges, they're pretty rickety. Yeah. They're pretty bad attack vectors, and that's where all the bad stuff happens. So I'm not sure, and I can't go super deep technically, but that's not my job. But I'm open to the idea that there could be multiple L1s. I'm also open to the idea that there's maybe it's one L0 and then a bunch of L1s and then other things. But I think it's still in development, and we don't have to know right now. But to answer your question, I think Ethereum probably has more upside
than downside, yeah,
in terms of multiple, right, than Bitcoin. Look, I think Bitcoin is digital gold. Okay, it's money. Gold has been money for 5,000 years. What is money? Money is an asset that exists in the absence of a liability. Only gold fulfills that. Everything else that we think of as money is currency. Currencies sit on top of gold. Gold is the base layer of money for all money in the world. Every central bank owns it, and they build the money, the currency on top of it using debt. And it's fiat, so it's bad because it can be devalued. And there have been 775 paper currencies in the history of the world, 3/4 of them zero. They've disappeared. The rest will eventually disappear too. So gold has survived for 5,000 years, but it's not very divisible and it's not very portable. Like if I had a bar of gold, which if I were Kyle Bass, I would reach under my desk and pull out a bar of gold because he keeps them under his desk. And I think I'm a pretty fit guy for a 60-year-old, but I couldn't break that bar of gold into 3 pieces to send you each a piece. Even if I could, which I can't, I couldn't stuff it in the phone to send it to you. So it's not divisible, it's not portable. If I have Bitcoin, I can punch a couple buttons and send it to you immediately. And the stock to flow ratio of Bitcoin is the same as gold, which is interesting. So I think it becomes the digital gold, the base layer of money for the future. And Hal Finney, God rest his soul, said that, 9 years ago, that it was likely that would happen. And I think that's pretty cool. Now, what does that mean? That means the $5 trillion value, the monetary value of gold. There's $10 trillion of gold. 5 of it's, earrings and chalices and gilding. That doesn't count. The monetary value in the central bank vaults is 5 trillion. That's definitely replaced by Bitcoin. I mean, no question in my mind, so we get to 5 trillion. So that's from here, what, 6x, 7x? That's pretty good. I'll take that. Then, if you listen to Murray Stahl, who's a mad genius, great value investment guy, but early to Bitcoin, I say he makes me seem bearish about Bitcoin because he's like, look, we're going to replace all of M2 globally, and that's 100 trillion. So that's a big number for Bitcoin. Maybe, maybe not, but he has a great argument why reverse Gresham's law applies. Gresham's law says bad money crowds out good, and that's been true. Look at Zimbabwe or Argentina or Venezuela. But he says with real money, gold and or Bitcoin, it eventually crowds out all the other money, which is true. Gold has lasted for 5,000 years. All the other monies went away. It stays around. So ultimately, it becomes all of money. It's a logical argument. It's a good argument.
Sorry, Mark. Whilst we're on the topic of currency, Mark, I'd just like to ask what your thoughts are on this theme that's been picking up momentum over the past year, which is a global de-dollarization. Do you think that has more legs to go over the next sort of 4, 5, 10 years? Do you think that is going to pick up more momentum, which should be bullish for Bitcoin as well?
100%. And look, it's part of the plan, but it's not our plan, and it's not Bitcoin's plan actually, because Bitcoin doesn't have a CEO, doesn't have a plan. It's China's plan. See, the thing that people are forgetting, people are like, oh, Bitcoin's going to be the next world reserve currency. No, it's not. The renminbi is going to be the next world reserve currency. And the reason is, and this is kind of fascinating. So especially given where Tim's from, and the original global reserve currency was the Portuguese currency. And you think about that. How does little Portugal, which is not very big, it's like, size of Ohio, how does it become the superpower? And it's because the center of the universe was in southern Spain and Portugal. There was no New World. There was no North America, no South America. India was just, fledgling country. Been around a long time. But, and Portugal had the tallest trees, therefore the fastest ships, the most powerful navy. They dominated and they became the world reserve currency. Then Spain took them over and became the fastest armada, and they had the world reserve currency. Well, then a funny thing happened. The Dutch, which is about the size of Indiana, took over the most powerful armada in the world. How? Because the Rothschilds created the first central bank in 1607, and they printed money out of thin air and bought a mercenary force to conquer Spain. It's pretty cool. So Netherlands had the world reserve currency for about 60 plus years. Well, then what happened? If you've seen the movie that's out now, Napoleon turned out was a better general than the mercenaries. So France took over. And then they had the world reserve currency. Then a bunch of the Rothschilds left Holland and went to the UK and opened another central bank and printed more money and brought the steam engine to naval warfare. And they defeated the French. And so they became the superpower, and the sun never set on the British Empire. Then the upstart Americans got nuclear, and we had the most powerful Navy. 10 years ago, China figured out the next superpower is not from ships, it's from chips. It's not about naval superiority, it's about cyber superiority. It's about 5G, it's about AI. And they graduate 4.5 million STEM engineers every year in China. And they have a goal. So from 1990 to 2020, the goal in China was to become a moderately prosperous socialism economy. They call it the harmonious rise. Doesn't sound threatening at all, right? And they took 700 million people out of abject poverty into the middle class. It's the greatest feat in human history. Unbelievable. 700 million people into the middle class. Absolutely incredible. Now, the next 30 years, their stated goal is to become the world superpower. They're already a superpower, and they have a reserve currency. It's part of the SDR. But they want to be the superpower and have the reserve currency. And I think they'll achieve it. But after that, then I think Bitcoin comes in and displaces them.
And what do you think about Cathie Wood, her take on CNBC that the total crypto market can grow to a 25 trillion by 2030? Do you think it's possible, and will the ETF provide more liquidity? For sure it will provide more liquidity, but will that the factor that create that market cap? What do you think about that?
No, great question, Tim. Look, 2030, not that long from now. And, look, do I think Bitcoin is a $5 trillion asset by then? Absolutely. Absolutely. Mm-hmm. Do I think the rest of crypto or digital, liquid protocols is another 5? Yeah, sure. By then, most of the bad stuff will go to zero, like the Doges and the Shibas. They'll eventually go away, right? Because they're just lottery ticket gambling tokens. Now, look, if Elon makes Doge part of some commerce,
it's possible.
Okay, fine. Mm-hmm. But the other stuff that has no value other than trading sardines, it goes away. But could I see another 5 trillion? Yeah. Now, could then there be 15 trillion of Coinbase and Kraken and Binance and the infrastructure, but not the protocols? If she's saying the protocols can be 25 trillion, I say zero chance. But look, she's a smart lady. But look, her job, if you look at her track record, her job is to say things that are fantastical to get halfway or a third of the way.
Yeah.
Right?
Yeah, indeed.
And that's not a bad strategy. Aim super high and hit high and do great. And she's super smart. She's built a great business. I have admiration and respect for her, but I guess I would disagree on, liquid protocols being 25 trillion in 6 years. I don't see it.
No, it's X25. It's a lot, huh? It's a lot. And if you count on the Bitcoin dominance, if you calculate the Bitcoin dominance on that market cap, it's more than 1 million actually.
Exactly.
It's crazy.
And look, and that is certainly possible, because basically you're saying it's a $10 trillion asset, which people quote that all the time and say that's just gold equivalents. I'm like, but 5 trillion of the gold doesn't count, because the Indian jewelry box, like the people in India that give jewelry, gold jewelry as wedding gifts, that's not used as money. It's used as a store of value. And that is going to be replaced by Bitcoin, because physical gold has a role, right? In the Mad Max nuclear winter, kind of nothing works. There are lots of stories of people escaping, the Nazis because they had earrings and they gave them to the, So there's a role for physical versus, digital. I believe digital will prevail and that everything will be digital. Every stock, every bond, every currency, every commodity, every piece of art, every case of fine wine, every private business, all of it. But, there's a lot between now and then.
Mm-hmm. Yeah. Anthony, we had also a question about the ETF, about the coins that are in exchanges. Can you ask that question?
Yeah, it's more along the lines of whether you see an issue. If you look at all of the Bitcoin spot ETF applicants, amongst them, I heard in your previous interview that unlocks roughly 30 trillion in assets under management. Now, if only 1% of that is allocated to Bitcoin, will there be any issues in terms of allocating that amount of equity towards Bitcoin, given the fact that the supply on exchange and circulating supply is relatively low? What are your thoughts around that?
Amen, Anthony. It's just math, all right? It's my hashtag. Hashtag just math. Let's just do the math together.
Yeah, the math is that we have not enough Bitcoin on exchanges.
No. We have plenty of Bitcoin at the right price.
At the right price,
right?
Yes.
I can have one Bitcoin be worth $1 trillion. Now, that's not going to happen, but you could. And it's like they say, the U.S. government should issue $1 trillion coin. Like, that's just a symbolic act of debauchery, right? You're debauching your currency by saying that. Bitcoin's different. There's a fixed supply, and some of that supply is lost or stolen, right? It's gone forever. Some of it's locked in multi-sig wallets and somebody passed away and that's gone. There's some of it that hodlers say, I'll never sell. Here's the thing. It's easy to say I'll never sell. Price is 100, not selling. It's 1,000, not selling. 10,000, not selling. 100,000. Talk to me. 1 million. Yeah, I'll sell a little bit. So there's a price for everything. There's no asset that people will never sell, right? There's a price. And so I think as this happens, and look, I'll give you the day, January 8th, 2024, the King's birthday, Elvis's birthday, actually my son's 13th birthday too. That's the day of the approval, I believe, for BlackRock. Unfortunately, Kathy's going to get rejected the Friday before that. And Bitwise, and look, we have a piece of Amun. We own a piece of Amun, which is 21 shares with Kathy, and a piece of Bitwise. So I wish both of them would get approved, but I don't think they're going to get approved because I think the game's rigged, and I think the game is going to BlackRock. And I've been saying this for 18 months. So it's not like I just jumped on this bandwagon.
No. Yeah, indeed.
I've been saying it for a long time that the only one that gets approved is BlackRock, even before BlackRock had an application. And it's because of the famous, Mandela quote, right? First they ignore you, then they laugh at you, then they fight you, then you win. So from 2009 to 15, they ignored us. A bunch of nerds and geeks playing through magic internet money. Then from 16 to 21, then they laugh at you. Ha, ha, nerds, geeks. Then they fight you. In 2022, they're like, oh, shit, this is real. We need to fight. And so the fight is try to shut down all the competitors. So they got rid of all the lenders that were competing with JP Morgan and the like. And then they're like, oh, well, they got these exchanges and we got to slow them down. So, we'll sue them. And they sued them, and now they just settled with CZ, and now they're trying to control. And so they're like, whoa, okay, we can't kill it, so we'll just buy it all. Okay, but let's think about that. Well, if you buy it, do you think you control it? Right, the miners still control it, so you could go buy all the miners, but you can't get them all. So it's American arrogance, it's American exceptionalism that everything revolves, like, what, we're 20% of Bitcoin volume around the world is American. I mean, we're just not that important. We're important, but we're not that important. And so I think what's going to happen is BlackRock gets approved, and that 30 trillion number is from Eric Balchunas, and it's UBS and Merrill Lynch and all these firms that have said, no, you can't buy this. You can't buy GBTC. You can't buy the miners. This is bad. In fact, at Merrill Lynch, if you made your money in crypto, they won't take you as a client. Just ridiculous. Like, ridiculous. They're basically saying you're a drug dealer, you're a terrorist. Ridiculous. Absolutely ridiculous. But that's how you fight innovation. And look back in history, right? Every innovation were labeled drug dealers, terrorists. Part of that is because who are the first people to use every innovation? Pagers, drug dealers, internet, porn. Why? Because they're boxed out of traditional banking and finance. So they embrace the new technology, and it turns out then it becomes ubiquitous. So now we've got this new technology, and they're like, oh, it's all drug dealers and terrorists. It's like less than 1%. You want to find a drug dealer and terrorist, it's sack-o money. Here's a crazy thought. The Treasury, the Pentagon, is trying to find $3 trillion that went missing.
They failed an audit again, didn't they? I think how many years in a row is that now? Yeah.
3 trillion. Trillion with a T. That's a lot of money. And where is it? It's in $100 bills in Iraq and Afghanistan and Ukraine and all these places where we wage war, and we exchange those dollar bills for stuff. And look, so if you're, I talk about this all the time. If I were a bad guy, and I'm not a bad guy, but if I were a bad guy and I wanted Anthony to do me a favor, I would meet him for lunch, and I had my backpack, and we'd sit down on the park bench and we'd have our lunch, and I would walk away, and he'd say, hey, Mark, you left your backpack. And I would just keep walking, and he would look inside. Oh, it's full of money. I have to do something nice for Mark. Not traceable. Look, we send money to Ukraine. Ukraine sends it to FTX on chain. They send it to Alameda on chain. They send it to an SBF-owned special purpose fund vehicle, and then he gives it to Democratic parties. All of it on chain. Totally traceable. Like, where's the bad old days of Sacco money?
Yeah, indeed.
And, Katie Hahn, who runs the venture fund, she was a prosecutor for 20 years. She's like, look, I chased bad guys for 20 years. Given the choice between Sacco money and fingers on a keyboard, I'll take fingers on a keyboard 10 times out of 10 because I got a chance to catch them. So ultimately, this ETF, it's going to happen. And 1%, as Anthony said, is going to go into this ETF. Because every client has been begging to own it. Not a lot. They don't need 10% or 20%, just one. And if you'd done that 5 years ago, instead of making 10% in your portfolio, you would have made 12. It's pretty good. 200 basis points for a 1% allocation, that's pretty good. So it's the best performing, Bitcoin's the best performing asset 12 of the 15 years, including this year. And if you put it in a portfolio, it's perfect because it's uncorrelated with everything else.
Yeah.
It's 0.0 correlated to bonds, 0.15 correlated to stocks. And it's because stocks and bonds are correlated 30% because they derive their value from the same thing. Economic growth, interest rates, GDP. That's not what Bitcoin derives its value from. It derives its value from millennials. Millennials, okay, are going to inherit $30 trillion from us, the boomers. They're not going to put it in stocks and bonds. They're going to put it in digital assets. My granddaughter, who's one, I'll use a prop. So my granddaughter is one. She will never have one of these. She will never have a leather wallet. She will never know what paper money is, right? She's a Zoomer, a Gen A. She'll never, ever use paper money. Not ever. And people are, no, that'll never happen. I'm like, of course it's going to happen. And the most important thing in your life will be your digital wallet, will be your HSM. And all of these things, like the thing I'm most excited about in investing is the internet was changed by Mark Andreessen inventing the browser. Web 2 was changed by Apple introducing this. And Web 3 will be massively revolutionized in the next couple of years by the ubiquitous HSM, the gateway for us to have our digital identity and life in the palm of our hand. And so owning a little bit of the new ETF, look, it's Bitcoin in a boomer wrapper. I get that. And people say, oh, you don't own Bitcoin. Tell my 85-year-old dad, because he has a Coinbase account, that he doesn't own Bitcoin. He'll tell you you're full of it. Ask everybody who's listening to this, if you have money in a bank, you think it's your money. It's not your money. It's the bank's money. And look, we do that. We trust centralization for stuff. I don't want to keep all my money in my house. I don't want somebody to be able to come to my house with a gun and take all my money. So I'm willing to give it to another organization to hold it so I can have access to it. But then I take a portion of it and I put it in this unconfiscatable, unseizable, permanent store of value, okay? And that's the way it's going to happen. And as that develops, we're only going up. Now, we're not going straight up. We're going to do this. But higher highs, higher lows, accumulation, more people. What is it? 100 million, 150 million, 200. And the fact that I have to judge those numbers reminds me, I was at Google once. I got asked to speak to the Google Value Investment Club. And this was funny. So it's a bunch of guys who are super rich, and then they make all their money in growth, but they invest following value. And the previous speaker, God rest his soul, was Charlie Munger. And like, I don't know if I can follow that act. I mean, he's a legend and I'm not a legend. And he said his only advice to us was avoid women and booze. He said, those two things will take all your money. So I said, all right, I won't tell you that. But so I gave this talk, and as we're walking around the campus, I said to the one guy, I said, how many people on the Google campus? And he said, I don't know, 25,000. And the guy said, no, there's like 40,000. I said, so within 15,000 people, you know how many people are on the campus, right? And so how many users are there of Bitcoin today? I don't know, 100 million, 150, it doesn't really matter. It's a small number relative to the total population. Now, 3 billion people don't have, really good electricity. 40% of the people on the planet don't have a bank account. Okay, we're not going to get all those people. But of the other 5 to 6 billion, all of them are going to be in Web3. Every single one. Not tomorrow, not next month, not next year, but every single one of them. Just like every single one of us, well, except my dad. My dad still doesn't have an ATM card because he doesn't trust it. So he wants to go in the bank physically. I'm like, why would you want to go in a bank ever? But anyway.
Okay. So we've touched on a couple of very positive scenarios for Bitcoin next year. So, the halving event, we've got the Bitcoin spot ETF applications. I want to kind of get your thoughts on your base case scenario on the economic side of things going into 2024.
Yep.
Are we at the top end of the rate hiking cycle? Are we going to be moving into a recession? We've got the inverted yield curve. Does that mean a market downturn? So firstly, what is your team's base case scenario for 2024? And how does that impact your position or your thoughts for Bitcoin, given the positive events that are coming up as well next year?
Yep. So really, really important. So a couple things. So the most basic thing to understand about Bitcoin is it's a fundamental market, right?
Liquidity.
That is disguised by a totally hyperbolic, volatile, emotional market. And what I mean by that is if you look at the long-term chart, it's just up over a parabolic curve, following the Metcalfe's law curve, okay? It's just, and if you zoom out far enough, all those ups and downs that you see on that chart disappear. Like if you get far enough back, it's a very stable line, okay? And And the reason for that is the network is growing. Okay, the number of validators, all of the fundamentals, the number of wallets, the number of users, all of that is increasing, and we're following the same path as the internet. We're about 11, 12% today, penetration. And so that long-term trend is the fundamental trend. But then that's the value. Remember I said price and value have nothing to do with each other. The price is the day-to-day quote, and it goes like this because people get bullish, people get greedy, people get fearful. The reality is, and this is an important thing to remember, 1 Bitcoin equals 1 Bitcoin. Will always equal 1 Bitcoin. But we don't price Bitcoin in Bitcoin. What do we price Bitcoin in? Dollars, yen, euro, pesos, bolivars. Look at Venezuela. There's no bear market ever in Venezuela for Bitcoin because their currency was going like this. So Bitcoin priced in bolivars only went up. Same thing in Turkish lira or Argentinian pesos. I mean, any place where the currency is being devalued, the value of the asset, take gold, right? Gold for 5,000 years, a single ounce buys a fine person's suit. From Cleopatra's time to a suit of armor to a zoot suit to Savile Row today. A single ounce, you get a fine person's suit. Okay, what does that mean? Well, that means the currencies that are compared to it, because an ounce of gold is always an ounce of gold. I can exchange that ounce of gold for a suit. But what happens is other things like real estate and stocks aren't priced in gold. What are they priced in? Currencies. So people think, oh, stocks are at all-time highs. Things are great. Like, only because you price them in toilet paper. They price them in dollars or yen or euros. If you price stocks in gold, we're dead flat since 1997. And if you go back further, we're actually down. Because once we went to the fiat system in 1973, we've been devaluing the currency faster than the growth. And so, and that's the nature of empires. All empires fall, every one, right? Portuguese Empire, Spanish Empire, Ottoman Empire, British Empire. Every empire has fallen for the same reasons, greed. And they concentrate the wealth at the top, and then they devalue the currency and impoverish the masses, make themselves super rich, but then it backfires and you get the French Revolution, et cetera. And so the same thing's happening today in America. We are devaluing the currency. Right? I went to lunch the other day in Chapel Hill, North Carolina, not New York, not LA, $18.72 for 8 chicken wings and a glass of water. That's insane, right? Those chicken wings are not 100% better than they were a year ago. The money's worse. And so to answer your question, Anthony, if you go back to the pandemic, Bitcoin was trading about $15,000 and it went down a lot when they locked down because people were afraid, got all the way down to like $5,000. Amazing buying opportunity. And but people were afraid, right? People were afraid. Why were they afraid? Well, because everything went down. Well, why did everything go down? Liquidations. There was too much leverage. And in a liquidation, you don't sell what you want to sell. You sell what you can sell. So Zoom's down 80% and all that stuff. You can't sell that because that's where you're getting margin called on. So you sell your gold, your bonds, and your Bitcoin. And all those went down too. So if you bought that, amazing. So dislocations like that are great buying opportunities. But more importantly, what did they do? They doubled the money supply. So we've been a republic for 247 years. 244 years, we printed $10 trillion. Then in 2 years, we printed $10 trillion. We doubled the money supply. So what should have happened? Well, gold should have doubled, but it didn't. Why? Because JP Morgan spoofs the price of gold in the London markets to keep it down. Because if gold prices were to double, people would freak out because they know the value of their currency is falling. Well, Bitcoin should have doubled. It actually did a little better than that. Well, no, it was at 60,000 and it's down. No, it got to 69,000 because of greed and leverage and stupidity. Okay, the fair value was 32 at the time. The fair value today is 50,000. Okay, it should have doubled. But what have we done in the last year? For the first time in 100 years, we reversed the money supply growth. In America, we've grown our money supply by 7.5% for 100 years. we've devalued our currency by 7.5% for 100 years. And that's why the dollar from 1776, when we started, was called the dollar. Why? Because we stole it from the Dutch. It's called the Rijksdollar. And we borrowed the term from the Rothschilds, and we created the dollar. And from 1776 to 1913, a dollar was worth a dollar. And then half the Rothschilds went to the UK, and then some of them came over here. And with JP Morgan, they created the Fed, which is designed to make bankers rich. Remember, the Federal Reserve is neither federal nor has any reserves. It's actually not a bank. It's a private corporation that sets the price of money. Price fixing, bad. And so what they do is they devalue the currency to make the people at the top, all-seeing eye, super rich. And it's been a great play. But now we have this asset that can counter that. Because if I have a Bitcoin and there were $10 trillion, and I still have a Bitcoin, and now there's $20 trillion, the value of my Bitcoin just doubled relative to the currency in which I live. People always say, if you hate America so much, why don't you leave? I'm like, I don't hate America. I hate the people at the top, the government, but I can love the people of America. I can love American principles. I don't have to like the government. I don't like stealing from the people in the form of inflation. It's just a tax on the poor. But it's a funny time because, to answer your question, Anthony, we had a recession in 2022. Don't call it a recession. Like, oh, there's no recession because employment was good. No, employment wasn't good. We stopped counting employment the right way because everyone's retiring. All my brethren and sistren, the boomers, every day, 10,000 of us turn 65, and another 10,000 of us turn 71 and a half. And when you turn 65, you get taken out of the labor force. And when you turn 71 and a half, you have to start selling your stocks. So those two factors mean the employment numbers look better than they are. Okay, great. But everything else said we were in recession. The stock market went down 20%, economic activity slowed, but it was a shallow recession, like a 2001 recession, down, a couple percent over 2 quarters. The total year was 1% growth, just like 2001. Still a recession. Don't call it a recession, fine. So now they stimulated post SVB. They put $300 billion back into the economy, reversed all the QT, but now they've been taking it back out. And so now we're starting to see signs of economic weakness. So they're looking at yesterday's restatement of second or third quarter GDP growth that was really fast at 5%. It was just fake, right? That's government transfer payments and handouts and inventory building and money supply creation and selling the SPR. All those things aren't repeatable. And so now you look around the world, trucking is down, shipping is down, commerce is down. Again, it's not a disaster. It's just a slowing. Now, the question is, the markets believe the Fed is going to cut in January. No way. So are we at the top of the hiking cycle? Yes. Are they going to cut in January?
No.
No. And cutting isn't what we need for Bitcoin and other crypto to be successful, right? What we need is increased adoption and more development, because ultimately the money is going to take care of itself. We're going to have to go back to money printing. Now, how much depends on how severe the contraction is next year. And I do think there'll be a kind of double dip recession, kind of like, remember, well, you guys are young, but 82, 84, we had the same thing. I lived in Seattle, and there was a big sign, well, the last one to leave Seattle, please turn out the lights. Because everybody was getting laid off by Weyerhaeuser and Boeing, and the economy was really dead. And we had a double dip recession, but it was shallow-ish. And I think that'll kind of happen maybe 22, 24 will be that double dip kind of recession. Not terrible. But what comes out of recessions, this is the cool part, is for 13 years, we didn't let recessions happen because of QE. And that's bad, because when you let bad things survive, the good stuff doesn't get stronger. It gets weaker because the bad stuff takes share. And so what you need every now and then is a forest fire or a recession to clear out the bad stuff and let the good stuff grow. And so I think that's kind of what happened in 22. I think it'll happen again next year. And, Warren Buffett's famous for saying, when the tide goes out, you see who's swimming naked. And you don't want to see that, especially in America. Although Ozempic's going to cure all that. So that's, I was like, good. But that's a long answer to We don't think money supply spigot's going to come back on. So that's not going to be a big tailwind because they're not going to devalue the currency super fast. In fact, they're actually tightening it a little bit. And that's actually a headwind for Bitcoin. But the tailwind of increased supply, remember, if there's 30 trillion and they put 1%, that's 300 billion. In an $800 billion asset that only trades about 200 billion, you put 300 billion of demand for 200 billion of supply, party.
It's like GBTC bite Bitcoin in 2020. It's actually
a perfect analogy, Tim. If you go back, we were at 10 grand, right? We were below fair value at 30. We went right through 30 all the way to 60 in February. Then Elon had his famous tweet. And we went back to 30. And then we went all the way to 69 because we got crazy and we all wanted to get that meme number. And then they announced the ETF, the futures ETF. And on that day, straight down, because JP Morgan and all those guys could go naked short and push the price down. Why?
Yeah, indeed. Yeah, I have
so
the
they
same
could buy
thoughts.
it at a cheaper price.
But I have the price predictions. Let's talk about the price predictions.
Yeah.
We have a fan. Raoul Pal is fan of Solana. He's very he's betting hard on Solana. And Cathy Wood also said it in her interview that she is very optimistic about Solana. But I want to hear your side of this conversation. What are your thoughts on Solana? And
I'm much more bullish Solana today than I was 3 months ago because of my friends over in the Netherlands that helped me out. But I'm cautious about two things. The developer group, says that we fixed the problems that caused the outage last time. But volumes are down 90%. So when volumes get back to that level, we will see.
That's the test.
I will trust them for now until proven wrong. But that's a concern. The second concern is the FTX estate has $1.5 billion, I think, of Solana that they are going to have to sell. Now, they're not going to sell it all at once, but they're going to have to sell it, and that'll be a headwind. So I do think those two things will mitigate some of the. But look, from a use case scenario, if you want to have a really usable hot wallet that you can transfer stable coins, it's kind of tough to beat in terms of price and speed. The Solana.
Yeah, indeed.
If we get the Solana phone and we get decentralized cellular and decentralized Wi-Fi, I mean, there's some use cases there that I think could have some, because ultimately you got to make money. It's like, I love sushi, not sushi, the other one. Now, Uniswap. I love Uniswap. I love Uniswap, right? The DEX. It's great. But the token doesn't give me a share of the revenues.
Yeah.
And that's a problem. So they need to kind of do Uni 2, I guess, and fix it. But until they do, I just can't get excited about it. And it does keep creeping up, but it's a trading sardine. It's literally like a Dogecoin, unfortunately. And I don't like to say that because I think Doge and Shiba are just dumb. I think Uni is good. I think the protocol, the DEX is amazing, but you got to tie the protocols to the revenue base.
Yeah. Cosmos is has the same problem, actually. Cosmos has the same problem, and that's where our researchers talk about a lot. You cannot have a price that goes up if the token is not related to the revenue.
It's just hard. And look, everyone's afraid of, the SEC coming in and saying, you're a security. Look, regulating the world using 80-year-old laws is just dumb. It's just dumb. And I shouldn't
Yeah.
say that about the regulator that regulates me. So I'm not, I'm not asking for an audit, but it's just dumb. I mean, it'd be like trying to say, we should govern, automobiles using the same laws that applied to horse and buggies, or, governing air traffic using the laws of trains. It's just dumb. The world changes, technology changes, and the laws need to change too, and the regulations need to change. And government by enforcement is bad, right? If you tell me, I'm not going to tell you what the law is, and you do something, you broke the law. What do you mean? There was no law. Well, I'm creating the law now, and now you've broken it. Well, that's not fair, right? That's like telling your kid, you don't have a curfew. And they stay out late. Oh, you're grounded. Why? Because you stayed out after curfew. You told me I didn't have a curfew. Well, I'm telling you I have a curfew because I didn't think you'd actually stay out. Well, that's not fair. And it's not fair, and it's not prudent. And ultimately, it inhibits innovation, which ultimately inhibits wealth creation and inhibits growth and inhibits prosperity. But what prevails over the long term? Human ingenuity and creativity. For all of history. Here's the great thing. Every tech that's come in, we hate it. We being the incumbents, because we're about to get displaced. And we got to learn new skills, or we got to build new things. But we're better off today than any time in human history. Full stop, right?
Yeah.
Lots of jobs destroyed by tech.
Yeah,
Millions.
Artificial
But we have more
intelligence.
jobs today than any time in human history. And, my favorite stat on that is Amazon. Amazon didn't exist 27 years ago. This past 12 months, more than 100% of net new jobs created by Amazon. It's amazing.
Wow.
It's amazing. And people say, oh, but the mom and pop shops that had to close down, that's so bad. Yes, it is really hard to drive through a small town USA and see the boarded up shops. But our lives are collectively better because we can get stuff faster. We can be more productive. We can spend less time shopping and searching and use less fossil fuels, driving around town, going to stores. It's all, look, actually, I'm not anti-fossil fuel. I'm pro-fossil fuel. The more fossil fuels you use, the more prosperous the world is, full stop. But anyway.
Okay. Yeah, but my take on Solana is actually, it's very nice to use it with NFTs because it's very cheap and very fast. Actually, with the Fire Dancer upgrade, it has a lot of potential. And we see also a new narrative in the crypto space, and that are the real world assets. There is a lot of...
oh, no, that's coming. And it's a great point.
And Solana is actually the perfect protocol to get their piece of it. I think...
Absolutely.
Do you think...
We change the language. We just need to change the language. No more NFT. Okay, non-fungible token is a descriptor, right? That is what it is. It's a unique, non-fungible token, line item on a ledger. But really what it is digital property rights.
Yeah.
We need to change the nomenclature because NFT conjures up monkey JPEG. What it is property rights. And anything that's titleable will be an NFT or a DPR, digital property right. Everything. Your house, your car, your marriage license, your driver's license, your stocks, your bonds, your crypto, all of it will be entries on a ledger, right? That's what a token is. It's an entry, it's not a little coin. It's an entry on a ledger, a permanent immutable ledger that is an operating system for a spatial connected world of Web3 that is a glorious future if we just stop with the nonsense of, no, we have to preserve the old. No, that's not how growth happens. Look, I'm a biology guy. There's only two states in biology, growth and death. I like the first, I don't like the latter. And so it's all about growth. It's all about innovation. It's my pinned tweet on Twitter, right? Greatest wealth comes from investing in innovation. You got to believe in something for others to understand. You'll be mocked and ridiculed and cajoled for your non-consensus actions. Totally worth it. Totally worth it. So whether it's Solana, and look, I'm bad at short-term price predictions. Long-term, I think Solana can go significantly higher. Short term, I am worried about the FTX hangover, and I worry that it's gone up a lot. It's super overbought right now, as is Bitcoin, as is Ethereum. Long term, I'm very bullish on those significant L1s. I'm pretty bullish on a bunch of other projects too, but to me, it's ultimately about the innovation.
Can you, can you give us your, I guess, outside of Bitcoin, Ethereum, Solana, can you disclose, you know, maybe not any price predictions, but can you just
look, that you're looking at the moment? I love the Avalanche team. I think Gun is a mad genius, and I love John Woo. He's actually a good buddy. So but they have some challenges to overcome. But I like Ava. I've been hearing lots of good things about Rune. So that's interesting to me. I want to like Algorand. I do, because it's so beautiful and the math, and I want to like it, but I just haven't been able to get so comfortable yet that I want to like it. Chainlink is interesting to me because of that. Remember that view of a bunch of L1s and bridges, although I don't trust the bridges. But there's part of me that says, look, if we go there, we're going to need something to be really secure.
Yeah, like Chainlink,
And maybe it's it. I love the idea of Cosmos. I went to this event, and they had the Cosmos guy and the Solana guy head to head, and it was awesome. I mean, it was great spectacle. And the Cosmos guy just was like, you knock yourself out. You build the best mainframe in the world, Solana. You do that, and I'm going to build the PC. Like, yeah, that's kind of a good analogy, that the best mainframe was good until it wasn't, and then you need to move to PCs. But to your point, there are issues there that I'm still struggling with. There's a whole bunch of people that want me to love XRP. Look, if you really push me down the rabbit hole, it's too tied into the BIS and the WEF crowd, and I don't like that. That's the antithesis of where I want to go. I don't want CBDCs. I don't want centralized. I don't. And they're like, well, we're going to replace SWIFT. No, that's Henry Ford's lawyer. Henry Ford's lawyer famously said, Hank, don't build this company. The world doesn't want an automobile. They want a faster horse. They don't want a faster horse. We don't want a faster or better SWIFT. We want to blow SWIFT up. We want to blow FedWire up. And I don't mean blow it up like anarchy. We want a controlled demolition. And then we want to replace it with better tech.
Do you think Solana will hit 3 figures in the next bull run?
Oh, for sure. For sure.
Yeah?
Okay. Yeah. And will it stay there? Don't know. But for sure, look, the bull run from January to March will be big. Then there'll be a pretty bad correction, probably. But the next June to June 25 run
will be epic.
Big. Yeah. It's going to be big. It's going to be big. I mean, like bigger than we can imagine. And I was with Max and Stacy on Tuesday at a mining event, and Max has outthrown his 220 number around again. I'm like, look, maybe. My math is simple. Base fair value today is 50. The halving makes that 100. Every halving we've added 0
on it. Yeah.
And so that's 100. I think we go through fair value from June to June. I think there's less leverage this time. So I think we get to 150-ish, maybe 180. Could we go to 200 or 220? Sure. But you need more leverage. Now, the wild card is the ETF. If all 300 billion comes in, I can't even give you a number because I don't think there's enough to sell. But people will sell. Or they'll just trade the same one over and over and the price will rise.
Yeah, this was actually my analysis of Bitcoin. When you look to it, You see here the same 140.
Oh, look at that.
But by November 25. That's actually
I love it.
What
I
we
love
made.
it.
Yeah.
No,
historically, all of the bear market or the bull market peaks occur in Q4, 1.5 years post halving. So that's in line with the bull market.
100%. And then, you know, over the Thanksgiving weekend, they passed these silly laws like they did in 18 with the you know, first futures, you know, Bitcoin futures, and that started the collapse in 18 into 19. And I'm sorry, 17, end of 17, December 17. And then they did it again in 21, and they'll do it again in 25, for sure.
Yeah, for sure. But we also calculated the trend, the percentage of the trend, and you see it's less because of the adoption. And yeah, Bitcoin does what it must do, and that's follow a cycle, and actually
it's the law
very
of large
crazy.
numbers too.
Yeah.
Right? I mean, the reason, look, Bitcoin's an amazing asset. It's an amazing technology, and it's going to continue to grow for the next 5,000 years. I believe it is the base layer of money for the next 5,000 years. Amazing, right? The fact that we are here when it was created, unbelievably cool. So amazing. But when it was zero, going to $1 is the miracle. That was the miracle, that it made it to $1. From 1 to 10, not a miracle. 10 to 100, not a miracle. 100 to 1,000, not a miracle. 1,000 to 10,000, not a miracle. But each one of those 10x's is less percentage. It's just math. So going from 10,000 to 100,000 is not as good as going from $1 to $100. It just it's not as big a deal. So the difference is that growth then will trickle down into the rest of the ecosystem as blockchains, plural, become the operating system for the spatial web. And, whether we call it Web3 or I like the term spatial web, these guys wrote a book that's really good on that. I like that term. I just think everything in the world will be interconnected. And I always use a simple example, and then I'll leave you with this. So you're in your car, and you're in the back seat because the car drives itself. Not tomorrow, but 10 years from now. And it pulls into the fast charging station, and it doesn't take an hour to charge. It takes a couple minutes. You will not get out of the car and put a plastic card in the machine. Oh my God, no. The car, using a wallet, will pay the machine. And you'll drive away, and then you'll get in the freeway, and you'll say, I don't want to sit in traffic. I want to pay to be in the fast lane. It won't take a picture of your license plate and send you a bill. The car will pay the machine. And then for my car, I will be a Waze premium subscriber, and it'll send me on the fast route and send the rest of you on the slow route. So I'm just kidding around. But that's how interconnected everything is going to be. And that's the nirvana. The dystopia is if the central banks get their CBDCs and their passports and their 15-minute cities, because if you called them concentration camps, people wouldn't want to live in them. And that's a world I don't want to be in, right? Where that wallet and your identification can be controlled by a centralized authority. I want the pure decentralized world where merit drives what we can and can't do, not someone saying, oh, you missed your mortgage payment, so you can't drive your car today. And people say, that could never happen. Sure as shit, that could happen. And the worst, if you've ever seen Augustin Carstens, right? Jabba the Hutt, kind of the kingpin guy. Yeah. When he says, of course, we should control how you spend your money. And imagine the dystopian nightmare. It's Friday. Today's Friday. You get paid, and you have a couple cocktails, and you drunk text about the president, and your money tomorrow is only worth 75 cents. People say that could never happen. Sure, it could. And then worse, how about by next Friday, if you don't spend it, it goes to zero because we need more consumption to make the GDP number. Or worse, Target paid us a little something, something, so your money doesn't work at Walmart. That couldn't happen. Sure could. So I don't want that world. I want the permissionless world where however many L1s we have and however many, layers we have on top, we get to decide who we, have commerce with, who we partner with, who we engage in activities with. And I do think that's coming. I do think, that creativity will prevail. So anyway, look,
Okay.
I enjoyed being with you guys. Hope we could do it again sometime.
Final thought, final question, Mark.
Yeah.
Final question. We spoke about Bitcoin, we spoke about Solana. What is your price prediction for Ethereum? Just a number, just a number. I'm an Ethereum fan, huh?
No. I'm an Ethereum fan as well. It's a tough one for me. I know there are a lot of people that have the 10,000 number because it's a nice round number and everything can go in there.
I have 13 in my mind, 13,
Yeah.
15 I have in my mind.
Yeah. I haven't done as much work on the model for Ethereum as I have on Bitcoin. So I have the Bitcoin numbers at my fingertips.
Yeah.
But I look at Ethereum and I look at the growth and I look at the number of projects building on it. And it's first and there's no close second, right? I mean, as great as Solana is, it's like 7 or 8%. And as great as, some of the others, they're like sub 1%. So Ethereum's by far, and I always say, to me, digital assets today are like Saudi politics. There's the king, the crown prince, and all the other princes that hate each other, right? There's 6,000 princes in Saudi. They all hate each other because they want to sell you their oil and not the other guys. But they don't matter. The crown prince and the king. That's who matters. And so Bitcoin's the king, Ethereum's the crown prince. So if Bitcoin's going to 180, let's use 150. If Bitcoin's going to 150, I'm a 10 to 1 guy. Does that mean Ethereum's 15? Sure.
Okay.
Not bad.
Perfect. Not bad.
Not bad. Right.
Yeah.
After the bull run, we talk again, maybe. I hope.
Yeah.
I hope so.
Well, let's talk after the halving. And sometime next year after the halving.
Okay,
and,
nice.
We'll have let's do June 15th next year, which I believe will be the equinox, where we go from crypto summer to crypto fall. And that 12-month period is going to be a party.
Deal.
But we'll do it on the equinox on June 15th.
Yes, nice. Okay. Thanks,
All right.
Mark. Thanks for having you here. Thanks, Anthony, also for hosting this call. And I wish you guys a nice weekend and a nice bull run in 24 and nice holidays also.
Absolutely. Enjoy the holidays. Anthony, thank you. Tim, thank you. Really great to be with you guys. I love good dialogue and debate in search of truth. And that's what we did. We had a lot of good dialogue and debate. And, that's what it's all about. So enjoy.
Thank you.
See you guys.
Yeah.
Bye-bye.